Good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. Quiet Monday morning for a start because we've got major markets around the world actually shut for holidays. Closest to us, Hong Kong will be off today for a Buddhist holiday, and the US tonight will be shut for Memorial Day, and the UK, for example, will be off for the end of May bank holiday. But nonetheless, Japan's still open, and there's a couple of things that came out from Japan this morning. Specifically trade data, as you see down here, both on the exports and imports side, and obviously the trade balance. Exports came in with a huge beat at 8% for the month of April. This against a forecast of 6.4%. Imports also saw, although a slightly bigger decline, we see a narrowing of the trade deficit down here. Now, this basically lends evidence that Abenomics is starting to work for companies in Japan. And also for Japan as a whole. You are seeing traction being gained from a lot of big exporters gaining market share, and thus you are seeing these sort of numbers coming in. Excuse me. Just looking at the charts here. Excuse me. Looking at the charts here, I mean, we're seeing the N225 or the Japan 225 actually break out from this 15-year high of around 20,300 or so. Essentially, it's actually trading gingerly at this level, trying to get comfortable to this new territory. We could see pull back here to find a first support at these levels before actually punching through. We have all the elements for actually a stronger market. If this thing comes up convincingly and pushes through, we may see 21,500 as a midterm sort of target. If we don't see that, we probably see it pull back down to a stronger support of around 19,000 before a retest up again. Essentially, this is one of the few bright sparks or bright spots where equities are concerned. Now, the other big news was obviously a bit of a history. On Friday night, we saw US CPI numbers come in rather on the strong side or heavy side. We saw US CPI, if I can just pull it up here, coming in at 0.3 versus expectations of 0.2. Essentially, it basically caused a bit of buying on the US dollar, and one of the biggest pairs to see a pullback was the euro dollar. The euro dollar, as you can see down here, is trading outside its ascending channel that has been established since the middle of April or so. This has clearly broken a upward trend. This three thrust gauge that I used to follow quite strongly suggests that this three thrust was a weak rally, and it just reversed down here. It's come down, broke below the channel, pulled back to test again before failing. With the numbers that came out on Friday, and with Mrs. Yellen's statements, we're probably going to see arguments for a parity trade coming in again. But essentially, my view is, or our view is that, or our view here anyway, is that it's still going to hover within this region of these two lines. It's quite a big spread, good enough for traders to actually scalp on. But essentially, that clear trend that we have seen from last May or so seemed to have perhaps taken a little bit of a pause. I've argued that this is a or a double bottom, could represent a comfortable sort of bottom for the euro dollar. But it remains to be seen. Lots of policy, lots of event-driven or news-driven sort of data that could turn this thing either stronger or actually pulling back again. Just finally, one small note on a stock that we are following here in Singapore, Pacific Century. It's just gone up one direction from I think the middle of last week or the week before at around 40 cents. It's now trading at around 46.5 cents, essentially about 15% gain in the last 1.5 weeks when the market was actually rather quiet. There's speculation that there will be this stock will be once more privatized. Major shareholder here is Richard Lee, but just from a pure technical point of view, or rather, sorry, the privatization rumor or talk clearly stems from the fact that major shareholder had been actually buying back and applied for actually more purpose to actually buy back more shares, and this lends speculation that this thing will be taken up. All kinds of valuations for this company range from higher levels, but essentially from a chart point of view, this breakup, let's just take a look at it clearly here. This breakup around 45 is actually quite significant, and the strength this morning suggests that it could see a flip up from here I mean, this 5 cents range being flipped up to here with a near-term target of 50 cents. But as I may have mentioned, it's actually dominated by speculators and traders. It's something that one should be watching out for. But those are the stories that are being flouted in the market today from a stocks point of view. But besides that, that's it. Happy trading on a Monday then. Take care. Bye-bye.